All good over here.
Okay. Again, hello everyone. Thanks for joining us today. My name is Steve, co-founder, CEO of United African Basketball League. That last gentleman to check in there was Ike, my co-founder, business president of the league. And I'm just want to start with just kind of telling you about ourselves, what our mission is. So again, we're a basketball organization, but we're also a nonprofit, right? So we don't want to keep the good we're doing in the community just on the basketball court. We want to be able to, impact the community off the court as well. Our mission is all about health and wellness and just the overall elevation of the community, our local community, of course, but community these days have changed due to the internet. Community is on a wider spread, and that's how you all have joined us today here. I think I underestimated the impact of the cousins here. And I don't know why, because I am one myself, but I think I was just in my own world there for a little bit, just trying to get everything organized. But I'm glad so many of you are here today to join us again, here to just have that impact. This kind of started with me, on my financial journey myself. I thought I kind of had it all, together for the most part, as far as I wasn't doing bad. And I thought I was being wise with the money. But, due to us not being able to, leave the house much due to Corona and what have you, it finally made me tap into things I was, curious about, like, what is the stock market exactly? My journey was more so, okay, I go to work, I save up, I do maximum contribution to my 401k. I'm killing it. So, I opened up a Roth just because I heard some cool things about that. So I went to go open one of those up. And so what more do I need to do? But it's like, once I tapped in a little more, I saw, okay, there's much more I could be doing. And I could see why I should go in there because, again, the myth, right, that there was that next level was built. That was the myth for me. So it's not, and that is a very attainable next level. So I saw that, I learned that the way I'm built is I immediately need to share that with the community so we can all make that next level together, because the community grows together. If it's not growing together, then to me, that's a problem. So I'm just here to spread. I repeat, I am not a financial expert. We are not a financial organization. We are here to just be a vessel. Just like the basketball league in itself, it's a league, but it's just a vessel of impact. This is some of that impact that we're trying to do today. Now, did I think we were going to be this impactful on our first go round with this? No, I was not planning for that. That's not me. It's a greater power. So I'm thankful for our hosts. I keep telling them, and I'm not going to stop. But yeah, we have two distinguished guests. We're honored to have them here, and they're going to be, kind of running the show here. Again, I'm gonna be in the background trying to do my thing, chime in where I can. So with that being said, UABLpro.org is our website if you want to look more into us. Again, I made that growing thing. UAB Pro is our IG. You can touch base with us there, send us DMs. If you have questions, I'm going to be trying to look into the chat, kind of go over that, try to bring some of those to light. We are going to try to also see if we can get some cousins and guests to speak. And all the guests by the end of this should be a cousin. So I'm cousin recruiting right now, for sure. So that is definitely a mission of this as well. With that being said, I'm going to give the mic over to a good friend of mine, a gracious spirit as well, my friend Joe, just to tell you a little bit about his journey and kind of how he got where he is today. Joe, you mind taking over so I can go away?
You're on mute. We can't hear you.
All right. Yeah, Steve had to do it. How you guys doing? What's going on, cousins? This is a DMV cousin. My name is Joe. Some people call me Indu. Just a little bit about me. I was born in Nigeria, came here when I was 5, went to boarding school in Nigeria from 7 to 12, and relocated to the DMV area. Went to the Matha High School, then went to Cheney University, which is the first HBCU, the Trailblazer, of course. I was a 2-sport athlete, a poli-sci major, and after I graduated, I became a trainer just to try to stay in shape to work out for my NFL free agent workouts. That was the easiest way to stay in shape and also kind of make money. And fast forward maybe 2 years later, a client of mine advised me to open a business. She opened my eyes saying, she was just like, all these people come here because of you and not because of the gym. So fast forward 9 years later, I am a gym owner for the past 9 years, and I also work for the government. But on the other side, from my fitness business, I own a nonprofit. I am a founder of a nonprofit called Diaspora Connect, because I feel a big connection. After I moved here from Nigeria at 12 years old, in the DMV, it's a big melting pot of Black people from different cultures. And instantly I drew connections with, African Americans. And of course, growing up as a kid, we already know if you have parents from the islands or Africa, they always say, trying to stay away from the African American kids. But growing up in the DMV, that's all I was around. And instantly I built that connection. And as I got older, I was just like, there's no way I can move through this world and not be connected to other Black people. And then I just made a connection. I'm just, when you look at the transatlantic slavery, which is the biggest genocide in the history of this world, we are all family related. If you're Black and you're in the diaspora, we're all connected. So which made me found my nonprofit organization, which is Diaspora Connect, because we're all connected. We're all cousins in one shape or form, in one lifetime, another. We were all related, and what happened, this is what happens. We're disconnected, but my biggest thing is trying to connect everybody in the diaspora, African Americans, Caribbeans, and Africans together in one shape or form through this journey. And I'm definitely honored to be here. When Steve reached out to me, I was just like, I was a little bit taken back. I was just like, I'm going to be on stage with Taryn and Mark. I was like, I don't know if I'm ready for this. I had to like really go to the notepad and start writing down. Like I had like maybe like 20 questions. I was like, nah, I can't do that. I can't take the stage, because at the same time, all these cousins are here to speak to you guys and gain knowledge from them. And I'm just going to be sitting here. But just like Steve said, like I'm honored. Like, and I'm going to keep on saying thank you for taking time out of your day, because you can be doing something else, but you're here, to feed us and also help people out. Even Mark, you saw I had one of my athletes get on. I was like, no, you have to sit here, because my biggest thing is I see it as, what if there was a Mark Monroe when I was in college? So the thing is, like, whatever knowledge we have to give it to the younger generation, and things like keep on passing it on, because you're doing something that we haven't seen in our life. I haven't seen in my lifetime. So I can only speak from my spectrum of my life. Like, I haven't seen it. So at the same time, like, if this is happening, it has to keep on being passed down. And the younger generations, older generations, because everybody can gain this knowledge, but we can also create generational wealth, because that's the biggest thing. So I'm on board for, the Roaring Fours. That's that's it, and sticking to the script. If you're cousins, you already know that. Like, we already know the script, So the biggest thing is, like, the floor is you guys, and you guys taking and run with it. We're just here to moderate.
Thanks, Joe. Thank you. Quickly, Ike, did you have anything that you wanted to add as well?
You got to mute him, Steve. You got to unmute him.
I did already. He spoke earlier. Has to unmute. Ike,
Not, I didn't have much to add. I just want to say thank you to everybody for listening. And I appreciate you guys, and I my journey is pretty much the same as Steve's. Like, I just started like asking myself all these questions, once I got more time, once the pandemic started. So I'm just here to try to gain as much knowledge and seek as much information as I can, just like everybody else here. So thank you to our guest speakers today for taking time out of their day to bless us with this knowledge. And thank you for everybody else that logged in. So that's it.
Thanks, bro. I'm going to admit some more people from this lobby and see if I can get rid of that. But Taryn, the floor is yours.
Okay, so let's see. What can I say about myself? I'm from Baltimore. I live in DC. I went to Morgan State University. I love my HBCU. So
Mark said Howard last Thursday.
Somebody told me that Mark said I went to Howard. I was like, oh, no, let the people know.
My bad. I wish I could take it back. I'm gonna have to go back and like add in like a little typo on top of what I said.
Okay, we're here now. Fine. I see all the HBCU people shouting themselves out in the comments, so that's
of course
all love. I'm really big on financial psychology. I hone in on relationship with money and spending habits. We talk about growth and investing, and we want to get to this big picture of financial freedom, whatever that looks like for us. However, if you don't start with your own mindset and fixing those little subconscious habits, the better habits that you're trying to build in order to create financial wealth for yourself, you're going to struggle to maintain that. So that's pretty much where I want to start at in terms of my intro. Mark?
Yes, so I hail from Tuskegee University. I started trading in 2004, learned how to start investing at the age of 9 by accident. My journey has kind of taken an interesting twists and turns. Was an entrepreneur, then turned entrepreneur investor, then from entrepreneur investor, went back to my roots, which was trading, which ultimately got me there, and pretty much wanted to start teaching the game to everybody else, giving it away for free, and really just holding that door open and really breaking it down so that way as many people could come through that door and realize that the table is big enough for everyone, and being able to generate wealth, not only for your families, but also for future generations to follow, and being that example. So that's a little bit about who I am. For the most part.
Age 9.
Yeah.
That is so crazy thinking about where we are in this time. Growing up, right? And like, dang, this man said he started investing.
It wasn't like, honestly, like I said, if I had to go back, it's like, I really, really thank that ironing board for me putting a hole in that wall, which ultimately got me in the door. Pretty much, who would have thought my love for donuts at the age of 9 would have given me access into introducing me into a world that I knew nothing about, but ultimately changed my life. That's why I always thank that ironing board and me falling asleep in the room next door and putting a hole in the drywall that ultimately got everybody's attention to know that, okay, hey, bring this young man inside the room. So.
Nice. I thought I was, fortunate. I did learn about money growing up, but I didn't learn about investing. And actually probably a month ago, my dad was like, hey, it's funny. I attributed some of the things that I learned from him, mostly from my grandfather, no shade to dad, but he was like, I took it as, I didn't think you were ready to learn about investing. Yeah, You mean to tell me I might not know none of y'all because I'd be somewhere on a private island minding my whole business if you would have taught me how to invest as you're teaching me these money principles. So yeah, shade, all shade. However, I know better now, and I can make sure whenever I get a man and have some kids, our kids they'll be lit.
That's what's up.
Yeah, they're gonna be born into cousins.
Right. But I actually want you to do a deep dive into some of those money principles. But before we get there, a couple of icebreaker questions real quick. Taryn, have you ever been to Africa?
Yes, I went can't say last year. I went 2019 into 2020.
Okay. Where?
I went to Lagos, Accra, and Cairo.
Okay.
Oh, okay. Did an Afro tour. I'm big on the Afro tours. Too many European tours going on. Let's get the Afro tours going.
I didn't have a job either, so it was fantastic.
That does make it better. Mark?
So I was actually supposed to go during COVID. I was actually supposed to go the year of COVID last year. I was supposed to take a significant tour through Africa and also just checking out and seeing the world with my wife. But thanks to COVID and the fact that travel bans started happening, that kind of like just 86 that entire plan. But my intent is to go and not only just to be there as a visitor, but also to bring forth change.
So my suggestion is, how about we have the picnic in Africa?
You never know. I mean, I am working on this universal healthcare project that is scheduled to hit Nigeria soon. So
Dope. All right.
Awesome. One more. And Mark's going to cheat with this because everybody kind of already knows this answer. But favorite athlete of all time?
Oh. Is that for me?
Yeah, go ahead.
My favorite athlete of all time, gosh, LeBron James.
Bron Nation. That's it. It's just Bron Nation.
LeBron James.
Don't shake your head.
Don't shake your head. Like, we've already had this conversation.
I'm sorry, man. I don't see none of the other all the other great athletes that have come before him. And, that's a hefty amount. You have like your Kareem Abdul-Jabbar's or Lewis Cinders, your Bill Russells of the world, and even Jesse Owens, Carl Lewis. But I mean, come on, LeBron James coming straight out of high school, doing what he's been doing. And then at the same token, building schools. I mean,
it's okay, Ike.
It's the argument.
I feel like my life is complete if I've met LeBron James and he and I just sit down and have a conversation for an hour.
I think it'll happen.
It can happen, Mark. I mean,
it could be happening in 2021. So stay tuned.
Okay.
All you have to do is put the word out there. I'm sure the cousins will make it happen.
For sure. Taryn, favorite athlete of all time?
This is very hard, and I don't want to answer from an athletic ability. I do have to side with LeBron, not just because of the schools and all the give back that he's doing, but for me, I look at him as one of the pivotal pieces for our generation that starts to put financial responsibility first, increase investments, startup franchises, all those things. I think that makes him the greatest athlete of all time right now.
Do you have something to say, Ike? You just keep
no, Ike doesn't have anything to say.
Like, no.
There's nothing to say. There's just because it's hard to argue against it. You're on mute anyway, so I don't. I'm not going to unmute you. Okay, cool. I'm not mad at that. I don't know if I don't even have an answer to that question myself, but I'm right. I'm rolling with LBJ though. We can roll.
Bron Nation. I mean, what more?
Well, it's interesting because like when I was 13, I also sat down and met with Muhammad Ali.
What?
That was one of the dope. If you ever see a photo of me on social media, I'm sitting there holding the 1996 Olympic torch.
I do remember that picture.
And he and I are sitting there, and I actually proclaimed that day to be Muhammad Ali Day in Seattle. And And it was so crazy because there were so many quote unquote important people in the room at that time, my thinking was. And this man didn't want to talk to nobody else except for me. And then there was this like book with all of his iconic photos. And as we were sitting there talking, he just kept autographing pages in the book.
Wow.
So that's very high for me to say LeBron James over a Muhammad Ali. But I'm probably sure that if Muhammad Ali were alive today, I think that he would probably side with me in that, because of the fact that a lot of the things that he spoke to me about, those are the things in which that a lot of his hopes are essentially what LeBron James has brought to this entire generation and culture, in which that those are the things that what they hope for. He is what has become of that hope. So. Yeah,
like the dream realized situation. Yeah. I love that. Seeing some Serena in the chat, some Kobe as well, some other great picks. Dope. Shout out to Mark again for one of the most humblest brags of all time. I met Muhammad Ali. It's like wait, what? And I sat with him and he talked to me. That's what we just heard, people. And
God,
out of everybody, he just talked to him though. Why he was trying
right? Yeah, he just said it so naturally.
Because there was only 4 people in the room that looked like us, and I was one of them. Muhammad was the other, and then his wife was the other one, and then there was somebody else in the room that like just kept leaving in and out of the conference area. So. I think that was also one of the things. It was like we all stood out like pretty much like, an ant on a white wall.
Right. The origin story is making a little more sense to the Black Panther. Things are connecting. Taryn.
Yes, sir.
I wanted you to speak more of, as the principles you learned, kind of how you take that knowledge base and, help athletes, NBA players, NFL players, do better in this financial space, especially if you're just getting better at investing. So I just want to hear, again, some of those principles you bestow upon them.
Yes. So first things first, learning about money puts you at an advantage, but I don't know about Mark. I can't speak for his 9-year-old investing self. And no, I don't have comparison syndrome. I'm actually just in awe because I didn't know that. I think that you still have an opportunity to experience life. So what I like to say is life going to happen to you anyway. So I've had, good experiences. I didn't get a credit card in college because I learned from someone else's mishap. My cousin who went to school 2 years before me, her freshman year, she got wrapped into, how they sit on your college campus, like, hey, we'll give you a free pizza if you apply for this credit card, all these things. And she racked up like $10,000, $15,000 worth of debt. But she had a father that paid it off. She learned her lesson. However, I wasn't going to have that ability. So I was just like, oh no, I am not getting a credit card. You won't get me. And I had a bunch of friends that did it. I was like, yo, it's not worth it. But fast forward, I did finally get a credit card a few months before graduation. I just knew that I needed to establish credit. And I also had the cell phone house phone in your name, like all these bills in your name that, people go through, and I had to get that off my credit as well. So some of those experiences kind of shaped my future. I did really good managing my credit debt until life started happening. And I guess I can say short story. I'm fully transparent about it. So I was diagnosed bipolar in 2014. And from there, with like doctor's appointments, and I couldn't take work, they started targeting me. We had a small office, and I thought like, hey, I work in defense. These are a lot of prior military. They know what PTSD looks like, all this stuff. So I was like, hey, this small office of superiors that claim they care about me. I'm like, hey, if they see my behavior is a little off, they can help me realize it. Nah, that turned into like, nah, we got to get her out of here, get her out of here. So for me, it just created a lot of anguish and anxiety. So I started traveling. And next thing I know, between medical bills and me trying to have travel therapy getting away, I had like $20,000 worth of credit card debt. But in my mind, I'm like, hey, it's just money. I'll find money. You can make money. You can always find a way to make money. So eventually I'll pay it. It's not that big of a deal. However, that created a habit that I then had to learn how to undo. So it's another reason why I started focusing on relationship with money. Like, what are the things that allow me to make that change psychologically, and where I can then maximize my opportunities. So the other thing I see, we talk about like some of the myths about money. Like people are like, oh, I don't want to be in debt. I got to pay it off. I'm not doing nothing. I won't save. I won't invest. I won't do anything but pay off my debt. And I learned like, no, that's counterproductive. So any of these people who give money advice and say, the Dave Ramseys of the world, cut everything off, cut it up, do this, do that. And I'm like, yeah, if you don't establish yourself as a basis and have a savings, what happens when you have an emergency? You have that emergency credit card instead of an emergency fund. And here you are back into a hamster wheel of trying to break that cycle of debt. So those are some of the things that I learned to help me get over the hurdle. So I added that with like the principles of like, hey, when you get a raise, your lifestyle doesn't change. You might have a small incremental change because of happenstance. However, you're not going from a Honda to a Range Rover because you got a raise. So those principles definitely helped me growing up.
Powerful. That is news to me as well. I didn't know that. By the way, everybody, I met these people speaking to you. We are all new friends at the end of the day. Again, that's why it's so amazing that they got on here. I just learned something new. That is an amazing story. And I'm loving to see how you took something that may be perceived as a negative and kind of use it to empower you and empower others. So that's so dope. Now, can you tell us any personal stories of helping any athletes or something about that? And kind of, you can save names, I guess, if it's like a private thing, but where have you been thus far as that has come?
That's a great question. I just transitioned into this space back in October. So I am still recruiting clients. So any referrals, all the cousins, your mama, your daddy. So I am in the business development phase of that. However, prior to zeroing in on working with athletes, I was working with young professionals, but I was operating as a money coach. So I did a little bit of financial psychology, but mostly focusing on money management principles and debt repayment.
Oh, and I believe you were with the Washington Mystics prior as well.
Yeah, I was with the Mystics some years ago. That was a very interesting experience. I would say from a corporate standpoint of the sports world, I learned in less than 2 years that I would never want to be a W-2 employee of a team or a league office. I would do a 1099 all day. I would prefer to have a contract to my actual company. However, the way that they think about money and how they compensate their employees is something that I am grateful. I was laid off from the Mystics. So at one point I was distraught. I was in tears. I mean, big tears. I thought the world was over. I was never going to work in sports. And then I later look back and I'm like, I am so glad that happened to me. Oh my God, so glad. Because I know people that are still at that same team, and I can guarantee you they don't make much more than what they made 10 years ago.
For sure. And I think that kind of speaks to an important thing while we're all here: generational wealth building, and freedom, which means freedom from that W-2. I don't think there's nothing wrong, by the way, with working a full-time job if that brings you joy and happiness. But I think that we can all find a way around that to do things that we are truly passionate, if that is not that job. Which brings us to the Come Up series. Again, my time during COVID, I got to lock in. I said, this money game, I don't think I'm doing it the best I can. And then God sent me YouTube. Well, it was already there. I mean, everybody was watching shows and stuff early COVID. I was just on YouTube, something crazy. I just locked in. I think I got the shout out to American Express and paying for subscriptions. So I got premium YouTube, commercial free. So I was just on there. And then I found my way to the Come Up series. Game changer, to say the least. And let me not waste you guys' time by trying to tell you what it is when we have the man, the myth, the legend himself, Mr. Mark Monroe. I have nothing for you. I just have this floor for you. Can you please talk to the people?
Sure. What would you like me to talk about? Like, do you want me to go in full presentation mode, geek out, or?
Yeah,
geek out.
I want you to geek out. If that's my options, please, let's geek out. And yeah. Yeah.
Shade gang or no?
No shade gang, no shade. It's Saturday. It's a day of peace and everything else.
I got my water though, and I did see you took that sip.
I just have a protein. I just have a smoothie, so I'm just gonna.
I got the alkaline.
I wish I was there, but is it possible that I may have share screen access, please?
Yes. And I saw that sip you took during the Ramsey situation.
Yeah, I did.
I'm going to make you host. I'm
glad that there are the Taryns of the world that are out there. We need more stories from Taryn. I know that this is kind of like interesting and like unprecedented, but I'd love to have you tell more about your story on the Come Up series. So we would love to have you as a guest there if you would love to indulge and come hang out with us and the cousins.
Okay.
I'd be honored.
All right. So, y'all ready?
Yes, we are.
All right. Let's talk investing. As you all know, or some of you may not know, I started investing at the age of 9. And I like to say I started it by accident because technically I was just trying to get the donut when my grandfather and his group left for when they went on breaks. They would take like 15-minute breaks. Some folks were smokers, so they couldn't, sit in there for too long. And so they would take 15-minute breaks. And then that gave me a nice little window of time that if I snuck downstairs quietly enough, and if I was there at the right time, I would literally come in, grab a donut, and literally just walk back up and go to my bedroom and just be cool without being seen by my grandfather. Everybody else was cool with it, but it just couldn't be seen by my grandfather. And so I think somebody is drawing on my on my beautiful presentation, but it's all good. And so for me, got busted because, of course, I fell asleep. It was too early in the morning. I fell asleep and I put a hole in the wall. And from there, after getting in trouble, I ended up not got the donut, but what I got was something even greater because I got to sit in and learn about companies, learn about economics a little bit, but really the fundamental pillars of, what is it that I live my life by even to this day? Time, value, cost, worth. Those are the 4 principles that my grandfather taught me that literally transcend all things that are, money related, that just, and for those that, know me, this is going to sound like a broken record for those that don't know. I've made quite a bit of money in my time, but more so I consider my time more valuable than the money that I have, if that makes any sense. But, just think about it like this. The Come Up series and why we created it is very simple. The game needed change. And instead of us playing cashier, we wanted the culture to be the cashier. We wanted each and every single one of you to literally reap the benefits of what your financial futures and look like, as well as paving the way and mapping out your own areas of success and rebuilding the communities. So today I'm going to keep it very simple. I don't know how to get that. I don't know. Can you guys see this like yellow print on here?
Yeah.
Okay. I don't know how to get rid of that, but yeah, we'll leave it there. So who am I? I'll go through that in a little bit. My masterpiece and what I believe is like kind of like my greatest orchestration that I've ever written is like my greatest thesis, my greatest, research that I've ever written. That's living and breathing in people. The new math, the walk away, and then pretty much we'll end it there with my final thoughts. So I'll try to get through that very quickly. So who am I? My 9 to 5. I don't have one. I'm an early stage investor. I invest in a lot of tech startups. Currently, right now, that sit within my portfolio, I've invested in 83 of them. Out of those 83, I would probably say about 90% of them are folks in whom which that look like us, or that have folks that are on their leadership or C-level team that look like us. And that's honestly how I invest. My focus is I invest in what the future of what my children or what my family's kids will one day look like, and I invest in that today. I'm an options trader, so I'm in my 17th year. Unfortunately, LeBron James is really in his 18th year. So, but I'm 17 years in, and I started doing it from my college dorm room. I give the game away for free. No knock towards anybody who doesn't. It's just that what I do is just that I feel like that's what my calling is. I always like to talk about my losses more than I like to talk about my wins. And I think that can kind of like give deference. My biggest trade loss was in 2018, was $18.2 million. It happened. So, but I learned from it. And at the same token, I'm even better from that loss today. So with anything that I think that you're probably going to hear in today, it's going to start with something in which that motivates you. It's always about the motivation and where is it that you start, and how does it lead towards giving you some form of purpose. Without purpose, there is no reason for anything. Like if you don't know what your purpose is, there's no knock towards that, because I'm probably sure that you've still got time to figure it out. The thing is, it's just that one of the things that I will give you a hint about when it comes to purpose, you'll tend to find that you'll find your purpose when you realize that you stop thinking about yourself. And so there's this thing that I always like to say, and it's a cold, staggering stat, is that 98% of investors or traders will lose 100% of their portfolio trading on just speculation over time. That's not me speaking. That's what the data says. So essentially, if you were in a GameStop trade and you got into it because of the fact that you were like, oh, well, I should get into it because of the fact that everybody else is getting into it, that's speculation. And I feel bad for a lot of folks in which lost their money, but I'm sorry, you just happen to be added to yet again another one of those stats that we see every year, which is essentially that 98%. And so I come forth with 3 simple things. It's a game plan. You study and assess by building some form of a trading plan or investment plan. Then you trade or you invest in the long term. And then ultimately your focus is from that, you should be focused on changing the world. To me, if you follow that plan, then that is the greatest payment that you can ever give back to me or anybody that's associated to me. So when I say by trading plan, it's a method of identifying and trading that takes into consideration a number of variables, including time, risk, and your objectives. One of them being, what is your motivation and what are your goals? I always say trade on the long term, because did you know that long-term investments always win out over, say, for example, short term? You may earn some short-term gains, but I always say this: when you're doing things in the short term, unless you're very skilled at it, a broken clock even works twice a day. So which means that you could be on a hunch or some type of speculation. And at that point in time, you could possibly be wrong on the next go around, or be right twice and then essentially be going on a complete losing streak. So I always say this: did you know that 1 to 2 year option trades are better than 5 to 10 years worth of stock gains? So perspective. If you've ever heard of those folks who said that, okay, hey, had you invested in $1,000 into Netflix stock 10 years ago and then had it today, then you'd be about $510,000 richer. You can do that in, say, for example, picking the right trades within options trading and essentially getting there. Now, of course, there's risk to it. Now, don't worry, I'll get into the part of explaining. Next focus is, of course, we call it the new Roaring Twenties. We know what the previous Roaring Twenties was like. It sucked because of the fact that we, as a people, we didn't get to take part into it. Check out 1919 all the way to 1929. But with discipline, you created generational wealth, and now you can create and rebuild the communities that surround you, or even those in which that you have yet to journey to. So what does your freedom cost? I want to start there, because it doesn't matter whether or not you're an athlete or if you're an individual person. I think that we all have some form of a sports background. I myself, I ran track and field from middle school all the way up to collegiate. And then realized that, okay, hey, there are tons of folks out there on this track field that, they have a better chance of making it to the Olympics. And then on top of that, I said that wasn't really my speed, though that I was pretty fast. But yet at the same token, I realized that, that's not where my talents were ultimately going to take me. So then it's like my focus was always on the freedom. But here's a staggering stat. Let's take the average person that makes $20 per hour. So if you think about it, take your $20 an hour, and then you multiply that times, let's say, I think it's 2,080. And if you do 20 times 2,080, that's $41,600 in a year. But here's where that stat becomes a little bit interesting. You take that $20 per hour and you divide that by 60, that's 33 cents. So that means that the value of your time per hour is only 33 cents. Okay, so here's how we change that, because honestly, I believe that each and every single one of you is worth more than that. Your time is worth more than that. The generations that await you in the future to hear about, like, even when you get old, and seeing the fruits of your labor and everything else, they're awaiting your greatness, and this ain't it. So let's start from the simple perspective of, let's say if you had $10,000, let's trade Apple. Since everybody knows who Apple is, most likely probably over 50% of the people in this room, or even on the YouTube, are probably using some type of Apple device, or they have at least one Apple device. So let's say that you have a price target for 150. Here's how it works in the stock market world. In the stock side of the world, Apple price, you bought it at $100 per share. Take $10,000, divide that by $100 a share, that's 100 shares. Say the stock goes up in 2 years to about 165. So then you gained about $65 per share in profit. So that's $6,500 worth of gain. Here's where the option side is a little bit different. The option side says, okay, hey, in a perfect world, you have $1 that's valued at a contract. So there's 100 shares in every contract. So then you say, okay, hey, with the 10,000 equals 100 contracts, because if it's $1 per contract times 100 shares, that's 100. So same rules apply. So far, so good. So then you take that 100 contracts times 100 shares, and that equals $10,000 in quantity in which you just spent. So at this point, they're both equal. But let's say that Apple stock increased to 125 from that $100, and the cost of the options contract is now at $4 a contract, because we started at $1 and we went to $4. So then you take that $4 times 100, that's $40,000. Subtract the initial principal in which that you paid, that's $30,000 gain. Now, of course, there's some risk to this. The risk is the fact that you could lose exactly what you invested, versus owning stock. You just pretty much ride the ship until essentially the ship just goes down if you choose to. So that's the risk. You only lose what you invest. And you can lose it at a higher risk, especially if you're playing short term. You decrease significantly that risk when you're playing anywhere from a year to 2 years out. And that's honestly what Wall Street doesn't want you to know, because of the fact that they don't tell you about that. The reason why they put weeklies and monthlies out there to make them look so sexy is because of the fact that, okay, hey, they're attributable and everything else, but yet they don't really tell you about the long-term options. They always talk about weeklies and monthlies. And that's where mostly every trader out there loses significantly their capital. And here's another thing about it, and hence the reason why we started as the Come Up series, is because of the fact that, most of your brokerages don't choose to educate you first before you even put your money in. It's kind of like you're being herded into the process without actually getting to know it. And our thing is, it's our way of keeping the market as well as the rest of the world on, say, for example, we're keeping them honest by telling each and every single one of you the truth. So that way you don't feel like the rug is being pulled out from underneath you, or essentially they're pulling the last one for you. And that's essentially the new math which that we've been teaching over the past really 9 months to the culture. And I'm really, really excited to hear about some of the things in which that is happening within each and every single one of your portfolios. If you haven't, then I'm probably sure that this is going to get interesting for you. And if that's the case, then that lets us know that there's even more. But let's go even further into the mindset, because I know that Taryn is going to like literally rip this apart and like literally take it to even further leaps and bounds in this session. But I want to start off with the why part, which is why are you an investor? You know, it's funny because each and every single one of you, even though that if you don't even have a portfolio, if you're invested in anything, you make an investment every day. You make an investment every day that you wake up and you decide to make one choice over another, the friends in whom which that you keep, the relationships in which that you have, what you decide to eat, whether or not you choose to exercise and work out, whether or not you're going to put that time into the gym. Every single decision in which that you make is an investment. Remember, I'm literally just teaching you from the 4 pillars in which that Louis St. Cyr, my grandfather, who taught me, a young 9-year-old whippersnapper who was very mischievous, how to literally think about the world. And that's literally, again, by time, cost, value, and worth. So why are you an investor? Let's look at it like this. And this is not my own work. I like to give credit to where credit is due, and that's by Simon Sinek, who did the Golden Circle. If you ever want to do some further research on that, and it really starts off with how is it that you see these rings. If you look at it from, say, for example, the inside looking out, then you're dope. If you're looking at it from the outside in, that's okay, because ultimately, by the time that this is over, you're going to see the world a little bit differently. So it starts off with the why, the how, the what. Normally, when you ask anybody, what they do, they can tell you an answer. And if they tell you how they do it, they can easily tell you. The other part is the why. Can they really tell you why is it that they do it? Can they give you the purpose of why they do it? And that's where it really comes into the forefront. So let's break that down. The what is a representation of products and services, if we're just looking at it from a company basis, of what is it that they sell. The how explains exactly their process and how they do it and how is it that they stand out from their competition. The why is about what a company believes in, not about making profit. Therefore, inspired and influential companies communicate from the inside out rather than outside in. Like, think about it when you look at some of the most pivotal companies, you know their why without even them having to really tell you, because they show it first. If you think about Apple, they care about their why because of the fact that they say, okay, hey, the reason why is because we believe that essentially that everybody should have access to technology, and which that ultimately inspires them to go out there and do something with it to create great things. And how they do it is, they design it beautifully. And then what they do is they sell iPhones and Macs. If somebody told you the opposite way around, then probably you wouldn't really believe in the pitch. Same thing with companies like Tesla. So, which leads us to the other thing called the rolling forest, which is something in which that honestly, it's like everybody, you probably may have heard whispers about it, but here, let's talk about it. So the rolling forest was just there to really just give you discipline. Discipline is everything. No endless trades necessary. Now I'm associating this to trades, but honestly, when you think about investment and also the rolling forest, it can also apply in your own daily life, and you're going to see how. So, that's in the sense where you see a lot of retail traders out there over trading, trying to overcompensate so that way they can build wealth, and you don't really have to. Then you learn to live with less to prepare for the walk away. So essentially, if you make that $41,000 and if you figure out a way to minimize your expenses significantly and choose to invest that, then essentially your chances from walking away and not ever having to be at the job that you no longer want to be at becomes a lot more clear, and you no longer have to go work for anybody else. And then we set it by a metric called SMART goals, which, something that I did not coin, but ultimately it's a pretty dope tactic. It's pretty much setting your goals so that way your goals are specific, measurable, attainable, relevant, and time bound. So pretty much let's make it much more simpler. Your goals are very specific, so that way there's no BSing, there's no cap. They're measurable, so that way you can hold yourself accountable. They're attainable, so that way you know that you can reach them, and ultimately it's not like you're not shooting for the stars outside of exactly what is it that are your capabilities at the time being. They're relevant because of the fact that they matter to you. They're time bound because of the fact that honestly, it's something that you're spending your time, your energy, your efforts to literally put it into. So if you think about it, here's a simple walk away model that you can think about. let's say that you make an X amount of dollars, but then you could save $2,500 every quarter. Notice that March, June, September, December, there's 3 months in between each of these. You save $2,500 for each of those, and then essentially you choose to invest those things. Here's an example of how that could work. Now, of course, this is purely based upon an options trade for a long-term strategy, so don't worry. If this was stock, you can always adjust it accordingly. So if we take that first March, and in a year that 2,500 turns at a return of, say, for example, 10K, June turns into 10K. So pretty much first year is 40K. Then the next year is 90K, actually 120K. And then the rest is probably about, I think, 360. You started off with 10K and then you turned it into 360K. Don't worry, I'll roll it back because I just said a lot there. So pretty much means that if you were willing to spend the time to literally put forth the necessary discipline and energy, then that $10,000 in which that you've invested over a quarterly basis, over a year, of course, they're staggered, then each one of those turns into an aggregate of 40K in year one, and it turns into 120K in year two over its stagger, and then 360K in year three. Now imagine if you do the same type of math and take that type of energy and say, okay, hey, well, how do I do it? It's really just by that rolling four strategy. So then we come into something about like what we know about options traders or just investors, period. Great options traders are great investors. They understand technical analysis or they'll understand fundamentals, one or the other. That makes you great. So that means that you can look at a chart and an indicator and be able to say, okay, hey, I can step in. Dope options traders or investors, they understand both of those things, technical analysis and fundamentals. Not only do they understand how charts move, but they also understand the company's DNA, AKA the financials, the management, and narrative. And it's funny because if you can look at your own finances on the personal side, then you can also decode a company because it's pretty much the exact same thing. Then when we say legendary options traders or investors, they understand technical analysis, fundamentals, qualitative and quantitative data. So, which means that they understand the risk associated with these, and they also understand the world that's happening around them and how that can affect their investments. I do this, y'all, because of the fact that it's very simple. Someone smart said that we are our ancestors' wildest dreams. And I truly, truly believe that. And I also believe that knowledge will ultimately transcend age. So if we are our ancestors' wildest dreams, and if knowledge transcends age, then honestly, yeah, I can make great investments, say, for example, within startups, and I can make great investments that can move cities and everything else. But I look at it today, and no matter where is it that I spend my time, I look at each and every single one of you as my greatest investment. So if that's the case, and if you believe the same thing, then it shouldn't be that hard. In typical Mark Monroe fashion, thank you. I yield my time.
Hey, Mark, you have to make Steve the host again because he gave you those rights.
Not a problem. Done.
All right. Steve?
Power back, like Thanos. Amazing, per usual. Somebody wrote in here that they could watch this flip through 100 times. I am the same way. I actually have to watch this back. Personally, I've been in this chat trying to do the admin thing. We do have a couple questions, and I may know the answer to some of these, but I'm going to leave it to the expert. But the first one I want to get to was in regards to congratulations. We should have said this earlier, Mark. Come Up Series hit that 50K mark.
Definitely.
If you haven't subscribed, again, what are you waiting on? It's free. Not only the knowledge, but the subscription. So go ahead and sign up. Join this family movement. But the question was, what is that secret next level? Can we get a sneak peek since we have you here, like right after, we hit that legendary mark? Can we get a sneak peek?
Oh, he's on mute.
He wants to say something, guys.
I can truly say that you won't have to wait too long. I probably may say something later on today alongside Jolene, because honestly, you guys get to actually hear the full-on story of how the Come Up series literally came together. And then Tuesday, I come forth, like over the next set of days, you're going to be hearing tons and tons and tons. And then honestly, it's like, I think I'm probably going to drop the biggest bomb on Tuesday. So yeah.
Woo. That is a teaser if I ever heard.
But I think, like I said, the greatest and my greatest investment, and I made a lot of dope investments over my time period. But like I said, I guess for anybody to understand me better, like I said, if time means more to me than my capital, and if I'm sitting here constantly opening up myself to each and every single person for the culture, then like I said, you are all my greatest investment. So which means that, I expect my investments to do very, very well. And what I mean by that is essentially that, hey, I give you the knowledge, you execute on the knowledge, and then essentially you either teach other folks or essentially you go out there and rebuild what was now, because you've been able to take your reparations, one, out of the market. And then two, what you've been able to do is to go and rebuild in places in which that, honestly, nobody else is willing to go out there and rebuild. You do that, then just imagine what it looks like 5 to 10 years later after you've made that investment.
Dope. People, subscribe. I am Mark Monroe on IG. It's at JolinGC on IG. It's that Come Up series on IG. Follow the movement, get with it. You do not want to miss Tuesday. That was better than a movie trailer. That was better than a lot. I'm excited to hear what that's about. Some other questions we got here. We're going to get a little technical. So how can the options be in the money and you be losing money?
So options can lose money and you're in the money based upon essentially the fluctuations on everyday trading. Also, there's this thing called implied volatility. You may want to look at this implied volatility and see exactly what are the factors that can hinder it. One of the things is interest rates. Another thing that can also hinder it is weather. So based upon some of the things in which that we've seen recently, and especially in the United States, is weather has significantly impacted parts of the country, as well as interest rates. We started to see interest rates climb a little bit this year, over the past few weeks, which also slightly spooked the market. When you do that, you see folks leave. Another thing is a lot of folks don't pay attention to the VIX. The VIX can also give you a good read when it talks about the amount of puts versus calls that are in the market. So if you have calls that are in the market, and if you see this VIX start to rise, then that lets you know in the short term that there may be folks that are out there that are hedging against. You also sometimes see that also happen as we get close to this thing called quadruple witching. Funny fact, when I actually just did that example in the presentation I just gave, each and every single one of those months is a quadruple witching month. So which that means is you see a lot of volatility come into the market on the weeks leading up to that week of where you're starting to see major contracts expire from different asset classes, which therein, if you're in the money and if your position is ultimately, suffering from that volatility, then in the short term, you'll feel a little bit of the pain. But in the grand scheme of things, you'll be fine.
I actually have a question there. Now, full transparency, I did put a put on GameStop. But that's not because that's my plan though, because I dedicated both of my portfolio to the long-term stuff. But I think Jolene might have said it. You have to still make things fun as well. So, a small portion, for different experimental things to kind of see how it works. And this was
how did it play out?
You're feeling a little risky.
I thought I was actually being risk adverse because I put the put against it because I was like, this is not real. It's going to drop.
Yes.
Going back to that point on implied volatility, it's not dropping at a fast enough rate, I guess.
No. So with that, also with options contracts, it also is predicated on buyers. So when you have contracts, when they're open interest, And so for anybody out there that wants to know the difference between calls and puts, calls means that essentially that you're saying that the stock is going to go up. A put says that the stock is going to go down. When you see a company like that like literally spike astronomically, you may get an early hit in the volatility, which is going to rule in your favor when you're right. That says that the stock is going to drop. But the more that the stock keeps dropping and there's not any buyers that are ultimately there to kind of cushion the drop, then that produces, say, for example, a hindrance towards your put now, because now your put will start to lose value because there's no interested buyers. So the same thing can happen if there's not enough volume of the stock being traded, but yet there's X amount of options out there. Now you're having to split that amongst folks that have open interest, which means that a lot of them will probably not go execute it. So you also have that against you. So when it comes to playing that put in perspective just for GameStop, yeah, I mean, the biggest thing is because of the fact that there's no interested buyers into stepping back in to buy the stock to bring it back up to that level, then that's where essentially your put is ultimately struggling.
Okay.
Gotcha. I'm still up though, I think, and I didn't put too much in. I'm following the plan, people. But
find the nearest exit if you can.
Back to that point, and this is for more of the advanced cousins. This hasn't been brought up that I've seen, and maybe this is part of the new level we're going to. What is a more specific put strategy, right? You outlined the call strategy, and we're following that, but
there is some new stuff that's coming, but I will say this for like on the basic level. If you're playing a 2-year long position, and if you know that a stock has a seasonality where, say, for example, is going to face some garbage months. So let's say, for example, the stock will run, it'll have a great year, but yet the stock itself will also probably have moments in, let's say, February, August, and September, in which that you know that you're playing a 2-year long position. You know that they're going to struggle during those time periods. What you can do is you can actually hedge against yourself during those time periods and make money on the downside, all the while that your main position may take a few lumps here and there, but yet at the same token, you can actually bet against your own position and make money also at the downside. And when you've kind of like decided to leave out of that, let's say 3-month long put, just to protect yourself and hedge against yourself, you can sell that one or roll that into, say, for example, your existing call to average down your position. And you can do that again and say, for example, that August and September to average it down again. And then essentially as it goes back up, then essentially it increases your profitability and percentage performance.
What's for the more veteran people in the game, I think we need to start adding these puts. It shouldn't just be something we look at. We can make money on both sides, people. So I'm working on for sure to make myself a better trader. I have a question about your mental space when you lost the 18.2 million. Is that an M?
That's an M.
That's an M. Okay, just checking. So yeah, when you lost that on a casual Tuesday, what was mental space?
So a little bit of backstory about that. So I was in the process of doing my first ever lead investment round for venture capital. And so I literally just took my eyes off of my trading plan to literally focus on something in which that I thought that was just as big or could not have been bigger. So I literally said, okay, hey, I'm going to step away. My positions have X amount of time. I should be fine. I know, funny fact, it was also an Apple. And around the time that the yield curve had inverted, so which meant that it signaled that a recession was on the horizon between 12 to 18 months later. Cool. I was like, all right, I'll be all right. I'll be okay. There's this good investment opportunity. Closed the deal on the investment round. Greatest experience. Also probably learned a lot and also was very, very frustrated and exhausted. After coming back a week later after the deal had closed, come back looking at my portfolio is terrible, especially with that Apple trade. And I literally had lost 98% of the value of my position. So now I'm sitting back and saying, oh man, this is terrible because honestly, I should have been up significantly. And it hurt. I mean, for me to sit here and tell you that it didn't hurt me, then I'd be capping for real. It hurt. And the reason why it hurt was because of the fact that, it's like I knew better. One, I could have set stop losses or trailing stops and I didn't do that. I went up against my own knowledge and experience in which that life has taught me. And it took me back mentally to my first ever trade in college. Anybody that doesn't know about my first trade in college, I used my refund check because I didn't have any money for college. So literally my grandfather gave me $1,000 and then that was it. And he said, "You're smart, you'll figure it out." Yeah, I got connected with this person by the name of Sally Mae, and that's how I figured it out. And then I took out the refund check and literally invested that. Took $1,500, and $1,500 within a matter of a few days on my first ever options trade turned to $4,500. And I was like, yo, shoot, for a college freshman that like just use a refund check, fam, I'm here. And then next thing you know, a few days later, like I'm like, all right, I got some more time. It can grow higher and everything else. Mind you, I'm playing like literally a 3-week-long position. Come back later, exhausted from class, come back, $4,500 turns to $15. So that $18.2 million loss took me back to being an 18-year-old kid all over again and saying, dang, like but then I remembered all the lessons in which that I had learned over a period of time and remembering exactly who I am. And on top of that, knowing what my strategy is. And I said, you know what? I get better. After I made that first ever loss in college, I said, hey, I'm on to something. I just can't let my cockiness supersede my talent. And that's ultimately how is it that I proceeded moving forward. I let my cockiness also supersede my talent when I lost to 18.2 because I was like, all right, no trailing stop loss, nothing. So if everything goes bad from here, I had no protection. I felt like, okay, hey, that everything is going to be just fine. I need to go focus on this. Fast forward to now, that company is now on the verge of being acquired anywhere from $3 to $4 billion. And I invested about 2.5. So it's like, when I look at it, you know, it's like, it's not really a loss in the grand scheme of things, but in the interim time, it's just more so in the sense of remembering who you are, remembering what your strategy is, knowing that essentially that you can get better from this and pick up the lessons from it. Don't beat yourself up. I always tell people, would you punch yourself in a fight? If you're not going to do that, then don't beat yourself up here. Learn from your mistakes, get better, and come back again stronger.
Sally Mae, good old Sally.
Oh yeah. Sally Mae and I, we stopped knowing each other after my junior year in college.
Y'all broke up?
Cool. You know,
It was a situationship.
It was definitely a strong situation shift. It's like, because by that time, from freshman year to junior year, I became a stronger trader. And honestly, I was making more than enough to pay for my college tuition, but also I had enough saved up to pay off my student loan debt during my junior year in college. So yeah.
Question for you, Mark. What would you advise college students? Because I know I have 3 on here right now listening. What would you advise them?
Listen to everything that I taught. And then on top of that, you're going to have Taryn that's going to come through and just like literally just send you on like literally, they're going to send you like on the knowledge that Taryn is going to give you is going to send you somewhere to, it's like understanding the psychology of your money and understanding that relationship is going to take you to new heights and new levels. And then on top of that, once you understand that psychology of money, then on top of that, if you're ready to make that investment, if you're ready to sit back and learn, then boom, here it is.
Okay. Because I have a few of them, like they always send me like their calls. I'm just like, you don't have enough money for Tesla. Why are you doing a 2-week option, 3 week? And they never listen to me. You know, they're like, oh, I made $200. I'm just like, your $200 right now, like that can be very risky because it could go the other way. Mm-hmm. I'm more, of course, like I'm a cousin, so I stick to the script. Of course, you know, when GameStop came out, I bit that bullet on BlackBerry, and I was down for a couple of days. But at the same time, like I was down, but the rest of my portfolio was fine.
Yeah.
So like, you know, and I'm in the gym just talking about the BlackBerry, and they're like, "Why are you so calm?" I'm just like, "Because everything else is doing fine." You know, but I went against the script in terms of going on a hunch and what everybody's talking about. Let me try to get this quick money, but the quick money ended up turning the other way around, and I lost that money. So, and I use that as an example for them, but you know, they're always, you know, on Twitter, they're seeing like, all these tips. And I'm telling them like, no, you have to do your DDs and actually like look at the company long term, because you don't have that much money to play around with, opposed to a grown man on Twitter that has a whole job. He's been doing this for years. So he's telling you to do it. And when you lose that money, you don't have a job. You're a college student. So now you don't have any money. So that's the only reason, like, I sent them the link. I was like, you guys need to join in, because yes, you guys getting into options. You're seeing this craze, but at the same time, just like to say, quick money is not always the best money, because it can always go the other way around. So that's the biggest thing, especially like with the college kids. Like, I'm just like, look, you might not go to the NFL. Like, let's just look at it, from a different standpoint.
Yeah, and it's like this. It's like, we're all athletes. We've all been athletes at different points in times in our life.
Yep.
Did anybody like losing?
No.
So, I mean, if you and your team really didn't spend the time to ultimately practice and everything else, what were your chances of winning?
Slim to none.
Okay. And especially in the moments in which that it counted, the same thing works in, say, for example, your work, or let's say, your investment journey. Studying the game is like, knowing the game is like more than half of the battle. The other part of it is just execution. A lot of folks step in and just say, okay, hey, they're so ready to execute, but yet without knowing the game. And when you do that, then essentially you put yourself at a huge risk for loss. But when you actually study the knowledge and everything else that, study from other experiences, learn and like take in the information, then that kind of like just already makes you dangerous. I think, Taryn, you had said that a little bit earlier, just knowing exactly like the psychology, or just knowing about money just already makes you dangerous. Knowing about companies and understanding the fundamentals of companies automatically right there makes you dangerous. You're going to hear a lot of other folks talking and everything else in every which way. It's just noise.
Yeah.
Filter out the noise, study, focus, and execute. And I guess the other part is, for the short-term traders out there, don't give seasonal trades lifetime expectations.
Message. Someone wants to know a little bit about your, I guess it's for both of you. How do you manage life and trying to, still be an investor, especially you, Mark, you have a wife and everything as well. How does that balance? Does she trade with you? Like, how do you guys?
She's getting there. I mean, she's now going through the process of like even setting up, because she's like, yo, hey, she saw she hears me talk about like, great traders, dope traders, and legendary. Mm-hmm. My wife believes that she wants to start off, she wants to come into the game dope. But I mean, honestly, it's like I would have never been able to do any of this without my wife's blessing at all. Because of the fact that I like kind of had an idea of the toll and everything else that it takes from myself personally, the investment, that when you make that investment into a culture of people, there's certain things in which that honestly, it's like you don't really get to do. And it's like, I accepted that. And I think my wife, that was one of the things in which that we had to have that conversation for us to both get on the same page. And I guess for me mentally, it's like, it makes it all worth it for me every day. Like, if you ever hear my team or anybody else around me that truly knows me, I am more excited to hear about everybody else's their successes, more than even looking at my own. So it's like, for me, that like a part of that just like fuels me whenever I like receive messages. I don't publicize everybody else's gains or anything like that, because I believe that that's not my business to do such. But I always like feel energized whenever it's like a person has studied and then they're asking me a question in which that you can see that they've studied. I'm energized when I hear about like, okay, hey, that a person's life trajectory has changed because of the fact that they stuck to the script and they're doing X, Y, Z. Those things, they give me energy. Now, don't get it twisted. It's like, at the same token, there are things that take away your energy. Like, for example, the things in which that we sometimes do within the culture to sometimes, bring each other down or drag each other apart. That stuff hurts me. And it's draining. But for the most part, it's like, I'm in pretty good spirits. I wake up every morning at 4 a.m. Monday through Friday and just ready to go.
Can I say something? Look, I see all the BS that's in the chat. Like, I mean, at the same time, we already know there's always going to be somebody that's going to come in and like spread hate. Like, look, in all honesty, if you don't agree with what's going on, like you can easily, just how you came in and joined in, you can easily just like it's just that. Like nobody's here for. Look, I said I was going to be on my best behavior today and not be an a-hole today. I am trying my best. Doing that. Not like I'm being dead honest. Like I wish I had admin rights. I would just remove each person that's just spewing hate in here. Like and on like. We have two people here that are just giving knowledge. Like it's either you're going to sit down and take notes. It's very simple. Like just sit down and take notes, or you just leave. Like it's just that simple. Like you easily came in, just leave.
Can I say something? One, I didn't even know that was even happening. So whoa. But the first thing is like, hey, they chose to be here, so obviously they were learning something. Honestly, and it's like, if you chose to be here, then obviously you got some form of knowledge. Now, whether or not you want to choose to spend, and again, it's just a matter of where you choose to spend your time. Like for me, it's like, okay, whatever. If you choose to spend your time like going through and typing up essays or whatever it is, because I guess I saw that in the chat. If you're going to type up an essay, then honestly, it lets us know that you're not willing to execute within your portfolio. So, or like to build that generational wealth. So, I mean, honestly, if they want to do that, then by all means, let them go ahead. It's like, but for the most part, everybody else, I already know that they're on this tour of Be Legendary from 2021 to 2020 and beyond. And honestly, it's like, honestly, I treat it like an unaddressed envelope.
Delivered.
Like like let's go ahead and like sage it,
Yes, sage the room. Sage the room.
Taryn, do all of that.
Apologies, guys. I'm not the moderator extraordinaire. I was too tapped in as well and trying to.
I
missed him. I kicked out the Miz guy. He's out of here.
So it's just like whatever.
Yeah. If there's some other,
it just had to be addressed, just in case we had another little person in it. Like just exit left. Like just go ahead.
I think that the knowledge in which that myself and Taryn and everybody else, the questions that they're going to bring forth is way more valuable. So let's just get back to that.
Exactly.
Let's get back to that for sure. Quick shout out. I saw Jo Lynn in the chat. I tried to bring her on stage.
She had the goon hands out.
But the queen, legend. We salute you, queen. Back to the questions. About leveraging your 401k to invest, would you recommend it? Any tips on that?
It always depends upon where you're at. And clearly, I'm not a financial advisor. Not at all. None whatsoever. So I can only tell you what I would do. Me personally, I treat my money as if I treat every dollar that I have like an employee. When my money is sitting on the sideline, I'm upset because it's either that or you're on vacation just for a temporary short period of time. And honestly, you're looking to literally get back in the game. If that's not the case, then you're telling me that you want to go work for somebody else, and that's a problem. So for me, I look at it like this. Depending on what my risk tolerance is or what my risk appetite is, in the words of Q, because he says that, and I had to recycle that because it's dope. Depending on what your risk appetite is. If you want to have more control over your 401k to make decisions, and I say if you're still making those decisions, you should still focus on long-term, not short-term positions, because of the fact that your 401k still focuses towards that long-term, so that way when you walk away. I would say start with the money in which that you can actually start saving now alongside with the 401k money, and literally finding ways to cut those expenses and without essentially, literally jumping immediately into 401k. Now, if you can actually tolerate some of that risk, then by all means go for it, but then essentially have somewhat of a balance between, say, for example, true long-term holdings, like, for example, a percentage in your portfolio that's stock, and then another percentage of your portfolio that's strictly just a long-term trade. You can do that, and essentially your money will grow. And honestly, it's like, I don't see any harm in that. Another thing that you can look at, well, I guess I'll talk about that later because I don't want people to crucify me for what is it I'm going to talk about in 2.0.
Oh my. Oh my.
Yes.
Great. Another question was, when is the trade exhausted and how does he or you, how do you decide to roll into a higher strike or play a new position?
It depends upon what you set forth as your strategy before you even got into the trade. So I always tell people when you get into, like, say, for example, a year-long or 2-year-long trade, that's really just the fact that you just bought yourself time to figure out what your next move is going to be. So by the time when you execute or when you're ready to execute out of a trade, you should already know what your next move is. That's like playing chess. And for anybody that knows me, I love the game of chess. That's like playing chess and then waiting for everybody else to essentially move and then for you to finally react. Versus having a full game plan of strategy and understanding, depending on how certain moves move, then essentially you will also have a plan. And I think that serves you well. So for example, if you got into a 2-year-long trade, let's break it down. That means that you have a year to a year and a half to make a decision on what's your next trade going to be and coming up with a new thesis of what your trade is going to be that follows after this trade. It may even be that it's the same trade, except that you extend it out, but you have to literally come forth and figure that out with your thesis. And how you build that thesis is looking at what's happening now versus also how does that affect the future and what's also going on economics wise, if that can make any impacts.
That's a fundamental cousin strategy right there, people. Question for Taryn, what roadblocks do you have as a woman in your field?
Okay, cool. It's getting a little easier, like just a little easier being a woman, especially a Black woman working in sports, because there is a lot of highlight, a lot of focus. There are a lot of athletes that are hiring Black women, that are hiring women to represent them and do those things. But as a single person, mid-30s single person at that, it's always going to be she wants something. What does she really want? So I would say that's probably the biggest roadblock.
Okay. A lot of thank yous to both of you going on in my phone and comment. Again, please, guys, let's ignore this other energy here. We're here for the knowledge and for the good vibrations. So let's continue to ignore that. So the rolling force, right? Do you suggest people, can you tell us a little bit about pivoting, Mark? How about that?
So is it rolling force or is it pivoting?
Well, I mean, once you're on the path to a rolling fourth, I guess, but then some other things occur.
Yeah, so here's the reason why, and I want to expel this myth for folks, because a lot of folks are out here trying to be active portfolio managers and they're doing that way too early in the game. And that can have consequences. You only pivot when you realize that the thesis itself is broken. And typically you're going to find that people are doing a significant amount of pivots when essentially that they don't have a strong thesis in their initial investment. And then on top of that, you're not giving your position time to increase. Everybody's now trying to chase high percentages and everything else. And I do have to take accountability for some of that, because I think we created a little bit of something different. The culture's teeth have become very, very sharp, and they're very, very hungry for this generational wealth. But I guess the best thing to tell everybody is, take your time, and just focus on the long-term trades for right now. The only time when you should really be looking to pivot is, I'll give you an example of a pivot. Let's say that you're trading Boeing, for example. You're doing a Boeing investment trade. And Boeing, all of a sudden, we're starting to see economic indicators or things that are happening within the company where they're starting to do significant, massive layoffs. And on top of that, they're saying that, well, we may have our backlog is significantly dropping and we're not finding anybody else to come back in and step in and to fulfill that backlog. And on top of that, we see some potential headwinds up ahead when it comes to our defense contracts. That right there is telling you that the investment thesis is broken, because you're seeing that parts of their business are also starting to be significantly shook. With that being said, when you look at that, now it's time to start looking at, all right, well, obviously this position in Boeing, and there's going to be some strong headwinds coming down the pipeline, in which that honestly, I don't think that the performance over a period of time is just not going to be there. The thesis itself is, they've already told us something is wrong with the thesis. So at that point in time, when you have your pivot, you already put your pivot there. And I'll give you an example. For example, for me last year, I would have never seen Tesla had it not been for Boeing. So I saw Boeing as like, okay, hey, we've gone through the stuff with their 737. Things could get better, especially like when you find out that flights can get back to like some form of normalcy. Of course, COVID hit. That also was another thing that broke down the thesis, because it doesn't really impact Boeing because those planes have already been sold. So now it's just a matter of that slows down the planes that go out there, because of the fact that the FAA is like, hey, we've got to investigate. So with that, I had a strategy in saying, okay, hey, if not flight, then it's got to be auto. And I didn't really believe in GM or Ford. I've always been a fan of Tesla. I mean, I love the company and what is it that they stand for and their purpose. So then it started letting me see that there was opportunity within Tesla. And so I shifted the capital from both Uber as well, because I looked at Uber as well as a transportation company. So the Uber thesis and the Boeing thesis, with them both going out, allowed me to literally pivot from those two, going directly into one position, which was Tesla. And that ultimately allowed me to literally allow the portfolio, which to those is known as one of the burner accounts, to really flourish. And that right there says that, okay, hey, even with COVID, there was a strong sign of them still being able to make those deliveries because they had contactless delivery. And then on top of that, most of your auto manufacturers, they have to go through dealerships. Nobody's going to a dealership. Most of their vehicles are made to order, so which means that they're direct to consumer for the most part. So essentially, they don't really keep a heavy duty inventory on the sideline, which says that, okay, hey, there's strong opportunity and upside for Tesla versus the other auto manufacturers. If you notice right there, on one side, there was thesis completely broken. On another side, there was a pivot strategy in which that its thesis was literally starting to pick up legs and build steam, which allowed me to pivot from one long-term strategy or two long-term strategies into one significant long-term strategy. And that's ultimately how I played it out. And that's how each and every single one of you should start looking at your investments. When you think about it on a monthly basis, I mean, you're not really doing yourself a favor, because you're just really trading on technical analysis, and you're fooling yourself to believe that you're trading on fundamentals. There's no amount of fundamentals that you can jam pack into a 3-month long trade. None. So there's that.
Taryn, I'm working my 9 to 5. I'm a college student as well, student athlete. Why? Can you tell me some philosophy I might have, or something mentally that would prevent me from even looking towards investing? Like, why wouldn't I take that first step?
There are a number of reasons, but I'm going to use this opportunity to get a little bit into financial psychology, right? So me focusing on relationship with money, I'm going to give you 3 kind of breakdowns. So the first thing is A, V, B. A is in apple, V is in Victor, B is in boy, okay? But that stands for attitudes, values, and behaviors. So look at those 3 components as it relates to you, money, and spending. The next thing I'm going to break down is the 3 M's of money. And lastly, well, there's 2 other things, but I'm going to leave off with 50, 30, 20. So going back to attitudes, values, and behaviors. What are those things that you can point out? Simply starting with your spending. Then you can backtrack from there. So I'll give you an example. Some of the things that I know people understand is the money cliches. So the money doesn't grow on trees. Money is the root of all evil. All of those things that you can probably finish the sentence if I left it blank. that is ingrained in your subconscious. So you're automatically fighting against those things that you heard growing up to kind of shape your progressive financial outlook. So the places where Mark is teaching us to go, you still have to make up some middle ground with suppressing and unscripting and rewriting to block those negativities. So I heard those things growing up, but I was a rebuttal kid. I was kind of sarcastic. So my mom would say stuff like that. Like, what do you mean? Do you think money grows on trees? And I would be like, yes, because paper comes from trees and money is printed on paper. So I already, without knowing, was blocking some of those things. And even when you think about money as the root of all evil, it's like, no, how you spend your money, how money impacts you as a person, that creates the evilness. Just because you have money, or they'll say money doesn't make you happy. Money makes me very happy because I don't have any stress. When you have stress related to money, then you think money doesn't make you happy. So you have to you kind of have to psychoanalyze yourself and then trick yourself into having a different belief. So I guess I have another personal example. I'm not particularly a luxury goods person. There was nothing that never really appealed to me in terms of like bags and shoes and all this designer stuff. There are a few things that are like, yes, it's not about the luxury, it's not about status, it's something that I literally like. That's it. And it holds value. So I have a few of those items that I will acquire at some point, but I have mile markers. Like when I reach this amount of financial goals or personal goals, then I will treat myself with that. I'm gonna digress for a little bit, but going back to the luxury goods, I witnessed my grandmother had to delay retirement by 3 to 4 years because of the amount of credit card that she had from her Neiman Marcus, her Saks, her Bloomingdale's, because she was a luxury goods person. So now I can look back and say that probably impacts some of the reasons why it doesn't appeal to me, because I was in college when I saw this happening. So I'm like, I don't even want to work past 30. So you mean to tell me if I buy into this lifestyle, I can potentially have to work longer than 30, which I do now, but don't tell nobody. So I can kind of relate those things. Now it goes way deep, but that's like high level of things that you can start with. If you're having overdraft fees, but you still have money, there's still a disconnect there. You got to start to fill that in. One of the things I wish I've learned earlier, but I learned in my late 20s, was the 3 M's of money, which stands for make it, manage it, and either maintain it or multiply it. I learned maintain, and I understood that in order to maintain it, I had to know how to manage it. I said earlier, you can always figure out a way to make money. That's not hard. That's the easy part. Managing and maintaining. However, if I was taught multiply and not maintain, I know that I would have been a trader a lot sooner than just an investor. I started investing in my 20s, not as young as I wanted to, definitely not at 9. Shout out to Mark and his grandpa. But yeah, I would be probably further along, but I don't have FOMO. I don't have regrets in that nature. It's just like, okay, I know now, so you know better, you do better kind of situation. But the easiest way for me to get to being a trader was me understanding that I don't like to spend time thinking about money. Because if you think that money flows to you easily and abundantly, then you don't have to spend a lot of time. How am I going to make money? How am I going to pay my bills? Oh, this bill is due on this day. This bill is due on that day. I automated my life. I simplify it. I live off a credit card. I live off a charge card. Let's say that. I live off a charge card. I know my spending limits. I know that if I go above the spending limit, I still can pay the bill. I pay the bill off at the end of the month and I keep it moving. I rinse and repeat. I read Cash Flow Quadrant by Robert Kiyosaki, and it talked about pretty much where I aspire to be. I think all of us aspire to be as cousins. You don't want to spend your time thinking about having to sit down and pay your bills. If you have that stuff automated, if you know how to fiscally manage yourself and mentally manage your money, then it's very easy. But I didn't jump out the gate with my Amex. I started with a prepaid card. I was like, hey, I have to train myself to live this way. I have to get there. Like, I have to walk those steps. So those are things that I think if you just live your life simple, if you don't have excessive spending habits, that makes it easier to live your life simple. And not that you have to have a simple life, so to speak, but you're making your finances in a way of simplicity. So the last thing that I said about it was a 50-30-20. That's a simple money management system. You can Google it. It just stands for 50% of whatever you're bringing in is going to your essentials, like rent, mortgage, whatever, things that you have to spend no matter what. 30% is your flexible spending, things that might go up or down, your groceries, car insurance, if you can figure that out, how to make that not be as much. What's something else that fluctuates? I don't know if you was taking your clothes to the cleaners, things that are not necessarily the same all the time. You're planning and you're forecasting. Next month, you got weddings, you got birthdays, things that you have to spend money on. That's not the same as what you're going to spend regardless, that 50%. And then 20% is your investing, your financials, your debt repayment, whatever you're doing for your financial goals, that's your 20%. You can Google it, you can figure out your percentages. I mean, that's just the framework. So if you're a believer, if you're avid tither, obviously your breakdown won't be 50-30-20 because you have to figure out where your 10% is going for your tithes and your offerings or your charitable donations. But figuring out those strategies and how it works for you and your life, how you're going to manage your money, that's the best thing you can do for yourself.
Question from Mark. I'm sure there's at least one person out of, I think we're at 438, that has never traded before. What advice would you have for that person? Because I know when I first started, people were like, oh yeah, just go to YouTube or Google it. And I'm like, I don't even know what I'm looking for. So what advice would you have for that person, on how, the first steps, how to start, like what to look for, what platform to trade on, and, et cetera, et cetera.
So first things first, you can start off with a come up series. I mean, that's definitely on YouTube.
Yeah.
Then on top of that, it's like, there are some good books that are out there. I posted them up on my Instagram. One of my favorite books is Get Rich Carefully by Jim Cramer. You also have The Intelligent Investor by Benjamin Graham. I'm going to give a shout out to Ian because of the fact that you guys are known for him talking about this book, Money Master the Game by name like escapes me. Crap. Money Master the Game by Tony Robbins. Sorry, brain fart. So there's a ton of knowledge that is out there for you to start with, for you to start learning, because you want to learn first, or at least have some type of fundamental ground of what is it that you're understanding and what you're doing. If you're not doing that, and if you're just jumping out there, you're doing yourself a disservice. Though that there is a ton of resources in which that the Come Up series gives you. We give you every Tuesday and Thursday where there's knowledge in which that you can gain. There's even the pick list in which that we choose from, and we're very adamant about the picks that we pick because we pick those with conviction. And then on top of that, you got people like Kathy Woods from ARC and her team, in which that they do a phenomenal job of making sure that the information and the data is there. Check out their big ideas in which that they see for the future. So when you have all those resources, and just if you spend just a little bit of time, though that I think that you should spend, go through as much of the material as you can before you get started, so that way you have a sense of understanding. Then at that point in time, you're ready to get going. I think that at that point in time, you're ready to get going. And I know that that's not what a lot of folks want to hear, because they're like, hey, I'm ready to just jump out there and start building wealth. But the thing is, what good is being able to jump out there and then on the first sign of trouble, which you're going to see it along the way, not everything is just going to be like, all right, well, we're just good to go. And so the thing is like, what do you do in those moments? If you haven't like prepared yourself by equipping yourself with the knowledge and the tools and the wisdom, then honestly, you're going to ultimately get emotional and reactional, and it's going to lead you to making reactional decisions, which will hinder your wealth journey.
By the way, I want to kind of get back to the future. I think that's a big thing to touch base on. But before that, back to Taryn. By the way, it's Taryn's World on IG. That's TARYN for Taryn. It's Taryn's World. Have you ever, anybody on the call, have you been to church and you felt like the preacher was talking directly to you? Taryn, like that was, you kind of described a lot of me. And again, I don't think I'm doing terrible, but I actually try to hold on to some of that fear you were talking about, because I don't want to regress. So I try to keep it like a fire burning almost. Do you think that might be hindering me to some capacity? And how do I surpass that?
You definitely have a block there somewhere. You have to figure out what it stems from. And
not to interrupt. I think I know what it stems from.
What does it stem from?
Immigrant parents probably coming into the world and just grinding day and night. Even to this day, I need to get my mother probably retired as soon as possible. I see her first, maybe I love her more, but different conversation. But yeah, like I've seen them grind so hard, and I take a lot on my shoulder too with the family as a whole. I think I have to be kind of like the number two in command to my dad. So yeah, I don't want to go backwards, and I don't want to ever have to want or need, be in that capacity. So I just think about the grind and just, keep that fear to me.
Do you like grinding? How does that make you feel?
The grind? Well,
yeah,
grind is relative, but the 9-to-5 grind, I'm ready to be over all of that, like anybody else. But just that fear though. Any tips on how I can kind of work on that?
Put pleasure over your fear and understand that it's just a false reality. You have your why, right? So going back to the golden circle, I think you're understanding your how. You're probably going to utilize trading and leverage those earnings, those gains, to change your financial situation, to be able to retire your mom early, to be able to take care of your family. But there's also some lack of belief there. So I think the more you have, I don't want to use this term because it's not a good term in behavioral finance, but confirmation bias is the not good way. But the more you have confirmation, the more you get comfortable in your trading, your gains, believing in Mark and knowing that, this is follow the yellow brick road. That will definitely help secure you to the point where you're like, kick back. I wish you can see my feet because I feel like my feet I got them kicked up in the air. So faith over fear. I said all that to say faith over fear.
Faith over fear.
But I also know a little bit more about you, that you are an analytical person. So I know that you still need proof. But the proof are in the numbers.
For sure. And I'm loving how that the psychology, everything Taryn is bringing to us kind of leads us down the path to everything Mark is teaching us, right? It's like kind of like peanut butter and jelly, like work on it mentally first, then you're able to apply and embrace all the teachings from Mark in the Come Up series to truly take things to another level. So I that wasn't planned, but I just love how it's working out in that capacity. Speaking of the Come Up series, there was a question can you describe how you came up with the Come Up series? Like, what exactly led you to that? You and Jolene as well.
Y'all trying to get me crucified by Jolene. I am not going to do that, sir.
well, how she came up with it. You guys did.
Yeah, so we're supposed to, like, today, it's actually funny because as soon as we're done with when I'm done with this event, later on today, Jolene and I will actually go through and explain a lot of the questions that a lot of folks have been having about the Come Up series that we haven't been able to answer, that we've kept quiet for a very, very long time.
Oh, wow.
You said today? What time?
Oh, God. Jolene's in the comments. You go get Jolene.
Oh, why'd you do that? They about to get her. Whoa, buddy.
Is it like I'm trying to get those J's? It's a surprise drop. You got to be ready.
Exactly. I mean, we're on here now. I mean,
I just hope that you guys have the notifications ready.
People, get to it. You heard the man. I think you kind of touched on this before, Mark. I think that was Big Q in the comments, the Big Cuz. Can you describe how sport leads into your strategy, I guess? A little deeper.
How it leads into my strategy. You know, if you think about it, like the reason why I like playing long terms, and I know that all my athletes out there, you'll be able to understand this as I say it. You don't win the championship on the first game. The first game of the season, you don't win the championship. And it's so funny because the best example that I could probably give is the Los Angeles Lakers versus the LA Clippers. The first game of the season. And then who ended up hoisting up the trophy?
Bubble championships don't count.
Hey, man, yo.
Hey, we all play the same game in the same environment.
From what I know, and as an athlete, I'll say this. No. I don't believe in muting anybody's opinion that differs from my own. I believe this. The game is played within those lines. Doesn't matter if there's a crowd there or not. If you go out there on the blacktop, you're still going to have to still prove yourself. And I think the same rules apply when it comes to your portfolio. You're not going to, the generational wealth is not going to be built on the first day. It's just not going to happen. It's going to help you get better over time and reaching that ultimate destination by you putting in the work in and everything else. Because I'll say this. Say, for example, I always put people through this example. If I gave you $1 million today, there's 438 people, there's 422 people in the room. So let's bring it down a little bit. If I gave everybody in this room $500,000 today, and now you got $500,000, but yet you don't know how to invest, you don't know you don't know how to put together strategies and everything else, then honestly, at that point in time, then you have no plan, you have no strategy, then ultimately, how do you get to the championship or how do you win, which is ultimately that generational wealth? Because $500,000, as much as it comes and goes very quickly. Like, for example, think about every person out there that wins the lottery or the Powerball or the Mega Millions. They end up going bankrupt. Think about every single athlete out there that literally goes to the professional level. And then all of a sudden, when they're done, 88% or more go bankrupt or they go broke. That's not having a plan. That's not having a strategy. That's not executing. You're just there. And so essentially, it's like the showing you how to make money part is easy. My focus and my goal is not only to help you get there, but to also steady and stay your hand. So that way you can also keep it. And then on top of that, keep that growing and keep investing. And so the same rules apply for any athlete because you understand that type of sacrifice. You know, all athletes understand that type of sacrifice in order to reach that type of greatness when it comes to their sport. When you think about it, even if you're not an athlete, when you want to be the best at something, like the ultimate best at something, truly the best, it's going to take a lot of sacrifice. It's going to take a lot of energy, and you're going to be putting up nights in the gym or in the books or wherever it is to become great. And realizing that there's going to be moments in which that is not going to be also your finest hour. And that's okay. You learn and you get better from that. Investing, being an athlete, it's all in one because ultimately you had to invest in yourself. You had to invest in the sport or wherever it is that you did in order to become great. Same rules apply when it comes to being a dope or a legendary investor. People just don't happen. You know, I always say, you know, legends they just don't happen. They're made.
And we got a couple on this call here today. Really grateful. We're up at 2:58. Not to spoiler alert. Maybe I should have just let us keep talking. I don't know what you guys' availability is. I'm good, but just let me know when we need to shut this down. Okay.
I can do 10 after. That's it.
Okay, cool.
Can I ask Taryn a question?
Sure.
So you mentioned that you've dealt with professional people, but now you're dealing with athletes. So in the realm of dealing with athletes, do you feel like you have to break down their psychology in terms of how they view money and like transitioning into the future? Like, do you have a different approach to dealing with professional individuals and athletes, or you just pretty much treat them all as one and just trying to break their psyche? Because at the same time, we all know as a college athlete, you're coming out, you're going to get drafted, you're going to go to the pros, and you see, okay, I'm going to make $10 million. But, they're seeing a larger picture, but they're not breaking it down from year to year, like breaking down their taxes. So what approaches do you take in terms of dealing with a professional individual and a professional athlete?
Great question. One of the reasons I no longer deal with professional individuals is because the current earnings is vastly different, which means their mindset is different. So definitely dealing with an athlete, you have to treat them completely different. The strategy is definitely different. And I feel like it's more pivotal. It's pivotal for everybody, but it's crucial for an athlete to get their relationship with money and spending habits in check as soon as possible before they create habits that are, detrimental to their financial success, their future. I don't want to sound rigid. You still have to be in a space of openness and saying, I'm going to treat myself. The treating yourself for an athlete looks completely different than the treating yourself for a professional. Treating yourself and not even what you buy, but if you're training yourself as a professional to say, hey, I want this item, but let me purchase this item with returns, taking gains, taking profits, however you are multiplying your money, that should be the thing that's paying for your treat yourself, not I got a bonus or I got a raise or I got paid and now I'm gonna go buy that thing. So for an athlete, you referenced 10 million. Yes, but what level of the draft are you getting? What is your signing bonus? How much are you actually getting in that season?
Gotcha.
What are your incentives? Are you getting a workout bonus? All of those things you got to take into account. Otherwise, you're just going to spend it. It's going to go. And then tax time is coming and you don't have no money to pay your taxes. I've heard of situations from athletes, managers where they make a shit ton of money, but they don't have any money to pay their bills. Like, why are you not paying your bills for the year? Because you can. Psychologically.
Gotcha.
For sure. Great question, Joe. Joe at PFT Sports. Follow him. Follow his nonprofit as well, Diaspora Connect on Instagram. It's _ in between the two. Talking about the future, going back to that. As far as a investment question, where do you see wireless charging, as far as not a mat, but like over the air charging of?
I've definitely seen some companies that have definitely already started to like bring that to the forefront. Like they're doing it through airwaves. I think that Apple will be probably Apple or Samsung will probably be one of the first companies that will adopt that technology. I think that we're already starting to see that, given in the sense of how we're bringing in like magnet technology and seeing how that also does it. I remember being at actually a TechCrunch event one year, and they had this place where this person literally had this stack of I don't know what it was, but it was essentially your phone walked by and everybody was like receiving that little buzz because our phones were like on vibrate, and it was just letting you know that your phone was like, bring out your phone, and you're getting a charging notification, and yet you're holding your phone. So everybody was just like standing in the zone, and their phones were ultimately being charged.
Gotcha. Yeah.
I definitely see us there, and I think that ultimately you may even see that with the new iPhone that comes out, where it's like we're getting to that iteration where they remove the charging port, the lightning charging port at the bottom, and it'll just be wireless charging, which literally takes us into the next wave of being able to charge through over the air.
For sure. I was looking at this company for all those out there, and do your own research, and let me know. You can we're at UABL Pro on IG. DM me if you have that counter theory. Well, I like WATT, WATT is something I've been looking at. So they specialize in that arena as well. They got C certified weather determinants early in the game, and they've been seeing some gains as of late. Apple, thumbs up or thumbs down on Apple as far as, because people say they haven't been innovating as of late.
Don't do it, Mark. Don't do it. Just let it go. It's okay.
And I will say it was not on the previous list. Of course, you can't put all of the companies on the list, but I thought that was a mainstay. And it was
wow.
Oh, Shay Gang. Okay.
What just happened?
You just had to bring them out, right? It's okay.
Oh, my.
Just a lot of times everybody wants to find innovation, and it's just like, all right, we just go from here to here like this. Like we went from iPhone to like now we have phones that are made of glass. No, innovation comes through iterations. Like if you look at Amazon and its constant innovation, that came through iterations over time. And you're seeing the same thing with Apple, from say, for example, a phone that was like super duper small to now it's larger. From say, for example, opening up your phone with a passcode on the screen to now using your face to using your fingerprint, and then pretty soon in-screen fingerprint. That's huge. Using, say, for example, LiDAR technology to make even better photos, so that way you have depth sensing within taking photos. That's innovation. When we think about like using spatial audio, if you own AirPods Pros, where it gives you a spatial audio experience where it sounds like you're in a 360 sphere, that's innovation. And then on top of that, for all those devices to be able to immediately connect to each other, I mean, that's innovation. Making your own SoC chips in which that you can power your own devices, that's innovation. When we talk about like, I can keep going on so much, and when people talk about, well, because of the fact that they don't believe that the iteration itself, now if you want to talk about the iteration, that's just one thing. But to literally sit there and say that this company does not innovate, I mean, come on. The fact that you literally built an entire business model just from services from iCloud, which was people storing their data from their photos and their documents. Now you have Apple News, you have Apple Music, you have Apple Fitness Plus, you have so many other services, which literally even dwarf most of the companies within the S&P 500 with that revenue alone. That's innovative. Like to literally sit back and say that these things don't happen, it's just like, yo, you're doing yourself a huge disservice. And honestly, it's like, if you think that there's no innovation coming out of Apple, and then on top of that, when they drop those glasses, which I'll go from Shade Gang to like, hey, I'll see you in augmented reality, so that way, honestly, I can't see you. Then honestly, then at that point in time, then we'll talk about innovation. So, but to literally transform an entire generation of Gen Zers from going to buying laptops and desktops to now they can just use iPads as their general driver for their daily use, of not actually having to own a MacBook or whatever, but just use an iPad Pro or an iPad Air, have the same capabilities of using a pencil as well as a keyboard, and also providing a basic experience between iOS and macOS is not innovation. I'm sorry. You're hurting yourself.
Take a sip, Mark. Take a sip.
Yes.
I'd like to thank everyone for joining. No, not quite yet, but that was I didn't say it, by the way. It wasn't me. I just heard that somewhere else.
Hey, Mark.
To TiVo, I see TiVo in the chat. Your favorite cousin for sure in the building. Salute to you.
What were you saying, Taryn?
I was gonna say I pulled out my camera when you pulled them shades on. So I'll wait for your stories.
No, that was scary for sure. I was like, oh, what did I just say? Let me get in a couple questions for a couple friends of mine. Kill me. Can you ask him? This is the kind of specific, but if someone had, let's say, 100K free to invest, be your advice: Tesla options or a different strategy?
You see that?
If you want the risk, then there's nothing wrong with Tesla. Just make sure that they go for the long term. You can experience a little bit of pain because Tesla is one of the heavily short sold stocks out there in the market. But yet at the same token, I think it's still going to perform. But also, if you want the Tesla exposure, but you don't want all that smoke, then you can definitely turn over to the folks over there at ARK, or you can look at XLY, which is the ETF for consumer discretionary, or you can have the ARK Innovation. Notice this: ARK Innovation is up 25% year to date, I think, something like that. And yet Tesla has been in correction or kind of like in bear market territory over the same period of time. So, and Tesla is the number one position within that ETF. XLY has been climbing, and yet at the same token, Tesla has been non-existent, and Tesla represents 17% of that ETF. So if you want the ETF route, I just gave you two, but if not, I mean, you can also take Tesla, but just make sure you hit it for the long term.
That's that on that. Taryn, are you leaving us? You're good.
I have a lunch reservation and I did not eat today.
Gotcha.
So
It's important. I tried to Uber Eats you. I tried. I definitely tried.
Actually, when the reservation trumps the Uber Eats, I'm sorry.
I can't argue that. Okay, Taryn. Mark, are you also?
I got maybe another 5 minutes, and then I got a jet. Because I gotta get ready to give you guys. I gotta get ready to give y'all something special today.
Oh, for sure. Listen. You've overdone it already, so please. And I'm going to put it out there. Hopefully, this is not the last time. By the way, the comments are filled with joy and happiness for both of you. Which was my goal. Like I see the messages like, oh my, this guy really knows what he's talking about type things in the chat as well. Thank you for introducing. Don't thank me, please. Thank these people. So my heart is full and happy that the message is getting out there. So everybody else that heard this, tell a friend to tell a friend as well. Let's keep the movement going. So a love and appreciation for you, Taryn. Enjoy your lunch. Save me the leftovers. I'm not.
I'll see you soon, Taryn.
Oh yeah, I can't wait to see you.
I mean, I'm going to end when everyone ends. I can commit to that. Mark said 5. Well, now we're at 4. So.
Okay. That's cool.
We're at 4.
but I am about to order my Uber, just so.
Yeah.
Oh, okay. Cool. With that, let me see if this guy wants to. I have a friend here who, again, I'm trying not to get hurt by some people. So.
All right. So big question is, somebody asked, can we do this again?
Sure. Why not?
All right.
I don't know. You've all been blessed again. I don't know if he wants to turn this video on, but again, I have a friend, probably one of the first people I told about the Come Up series, and he just was like, I have to thank this man so much. He's not unmuting, so that's on him. I tried. This is Brandon Biggs, by the way.
I'm on, Steve.
Oh, there you go.
Sorry, I was just wrapping up a little open house that we had down here. But I want to tell you guys. Steve, Taryn, everyone. I told Steve before this happened, I just wanted to tell everyone thanks because he told me about you guys back in August. Like I said, it was midnight. I don't even know why we were talking about investing, but he sent it over. I looked at it. I've been on the Come series ever since. I just want to tell everyone here, it works. Trust Mark, trust Jolene, the whole crew, right? Been up way more than I ever have been in the past. I've dabbled before, but I jumped right in when he told me about you guys. And so I just want to say thank you guys, give you guys your flowers. Actually, I'm in the Virgin Islands. Let me tell you one more thing. I'm in the Virgin Islands, and I walked into my architect's building the other day. He didn't even look up. Usually he talks right to us. He didn't look up. I looked at his phone, and he was on E-Trade. And 20 minutes later, when we're done with all our stuff, he said, do you listen to the Come series? Do you watch Market Mondays? And I was like, yeah, I actually do. So I just want to tell you, thousands of miles away from Seattle, you have listeners. So you're making an impact everywhere. and I'm thankful
Thank you.
for it. So thank you guys.
Glad I can be of help.
So,
Thanks, Brandon. Go away now. No, that's my bro. Love him. He's actually doing big things. I don't know if I'm supposed to tell, but yeah, he's like building renovation properties over there in the Virgin Islands and whatnot. So I'm really proud of you, bro. Keep doing your thing. I'm just going to leave the floor for our two hosts to kind of give closing words, especially if we got everybody heard him say he'll do it again. And let me just say that too. Definitely a man straight up of his word. If he says it, he'll do it. The ease of which he made this whole situation. Taryn as well. Taryn just hit me up, talked, but that's really big to me because I try to be that as well. I don't like to say something if I'm not going to do it. So to see other people moving like that, just happy and thankful for that. That needs to be highlighted. But any closing words, guys?
Just study, focus, and execute. And just be kind. That's it.
Mine would be focus on your attitudes, values, and behaviors towards money.
With that being said, again, thank you for everybody joining. That Come Up series. I am Mark Monroe at Joel and GC in the place to be. At It's Taryn's World, at Diaspora_Connect, at UABL Pro, at Big Ike 115. That's my co-founder up there. The LeBron hater. At True Stories directly if you want to follow me. I'm going to be working. Oh, please send your feedback in the comments. I'm going to be reading through these.
Hey, Steve.
Right, however you can reach me. Just go ahead and let me know how we can make this better for next time. And yeah, we want to make this pretty much, I don't know if we're going to get these legendary people, but other legendary people as well, depending on schedules. And we're going to try to do this monthly. We're going to also look into doing some health and wellness as well, type calls and promote and spread that word. And we are looking to come back on the court. We understand that a lot of people are still doing basketball leagues. We were, again, risk adverse. We wanted to see how the whole COVID thing was going to be situated. So we are looking at, safe ways to move forward and get back to the hoops, get back to the youth camps. So donate, support, so we could, if you have any extra finances, UABLpro.com, you can find us, donate there, donate through the Eventbrite, because we, again, are here to impact the community. And with your help, we will be able to do that on a grander scale. Again, this was a great first step as far as that financial literacy playbook. And so thankful. Thank you for spending the morning and afternoon with us, everyone. Stay blessed, stay safe, and we will talk to you soon. Good day.
And this was recorded, so I know people were asking, because a lot of people want to watch it again, and some people didn't have access to it. So we're going to make it available. Right, Steve?
For sure. I'm going to figure out how to do that, but yeah.
We have to do that, yeah.
All right. Bye, everybody. Love, cuz. Oh, by the way, I am the official African cousin, if you didn't hear. Mark. Thumbs up. There you go. So I'm the
Mark
African.
Monroe and I approve this message.
There you go. Boom. Boom, shakalaka. All right.